Hey everyone! Now having the final weighted scores for strengths, weaknesses, opportunities, and threats from both the EFE and IFE matrices, the team was able to move into the SWOT analysis. This is where the external and internal pictures come together and get turned into the real strategy. So, the first step was pulling the highest weighted factors from both matrices and recording them as the foundation for the analysis. From the EFE, the top opportunities were the social-cultural shift toward wellness and athleisure, DTC sales growth, the rise of AI-driven design and 3D printing, mainstream demand for sustainability, and aggressive international volume growth. The top threats were volatile US trade policies and tariffs, intense rivalry requiring massive R&D and marketing spend, inflation-driven price sensitivity and trading down, the viral popularity of low-cost substitutes, and strict new EU environmental regulations. From the IFE, the leading strengths were strong brand presence, the DTC ecosystem, profitability and shareholder returns, rapid integrational expansion, premium pricing power, and liquidity. The key weaknesses were market concentration risk, pricing vulnerability, geopolitical sourcing fragility, and high competition in the industry. From there, Katie set up a Google form asking each team member to review these top EFE and IFE factors and independently brainstorm one strategy for each of the 4 SWOT quadrants. Once everyone submitted their responses, the team came together to build out the full list of strategies. The result was 12 potential strategies across 4 quadrants, 3 per category. The strength and opportunity strategies use what Deckers already does well to capture a growing opportunity. A wellness storytelling campaign would connect Hoka and UGG directly to the athleisure lifestyle before competitors close the gap. An active recovery subscription will launch a DTC-only recurring delivery model targeting high-mileage runners and nurses. And a sustainable product push would use brand equity to expand sustainable, produced footwear lines and meet rising demand for circular design. Strength and threat strategies use Deckers' strengths as a shield against external dangers. The brand ambassador strategy would reward loyal customers with early product access in exchange for user-generated content, reducing the need to match competitor ad spending. The premium pricing buffer would use brand loyalty to absorb tariff-driven price increases, while the supply chain gets restructured. And premium value reinforcement would position Deckers products as investments rather than discretionary purchases, protecting against consumers trading down. Weakness and opportunity strategies use external opportunities to fix internal vulnerabilities. The nearshoring initiative would redirect DTC profits to move manufacturing toward Mexico or Latin America. Portfolio expansion would develop Teva and Sanuk into adjacent wellness segments to reduce over-reliance on Hoka and UGG. And aggressive global expansion would push volume growth in targeted campaigns in emerging international markets. Weakness and threat strategies are the most defensive, designed to prevent a weakness and a threat from colliding at once. Defensive stockpiling would front-load production of core products like the UGG boot and Hoka Clifton into US distribution centers ahead of tariff deadlines. Dual diversification would simultaneously pursue diversification in revenue mix and manufacturing geography, and long-term contract loyalty would commit to stabilized production contracts in alternative regions to keep consumer prices steady during economic stagnation. Those are the 12 strategies that the team generated from the SWOT analysis. Katie will now walk through which ones the team is recommending to the board and how they connect to the McKinsey 7 framework.